Hey everyone, thank you for joining us today. We've got Alex Black, CEO of Rio2. We've been, familiar with Alex for, a few years here. We followed him at Rio when it got bought out by Tahoe Resources back a few years ago. And, he's trying another project here called Rio2 the Fenix Project in Chile, right, Alex?
Thanks, Garrett. Yeah, no, having another go at it for sure.
Yep. How did you find the Phoenix Project? What did you pay for it? What's the background story regarding it?
Well, we formed Rio2 virtually straight after we exited Tahoe. I exited and all my management team was shown the door. I don't know why, but anyway, the good thing about that was I was able to put that team together again, and that was back in 2016, late 2016. And we started, we found a listed shell, it was called Prospector Resources. We took that over. We renamed it Rio2 Limited. And we started looking for opportunities, projects and opportunities. And I think there was a lot of expectation that we were going to come up with something interesting back then, but it took a long time. 16 was a bad time because, as you know, the gold price ran up and people were feeling very brave and expensive from a deal transaction perspective. So 215 in hindsight would have been better. But anyway, we looked. In 2017, we identified Atacama Pacific as a potential interesting opportunity. Atacama Pacific had discovered what they called the Cerro Maricunga project, which we now call the Phoenix Project. It looked interesting. So we started talking to them back in 17.
Can I interrupt you for 1 sec? What does Maricunga mean? Because Kinross has got a Maricunga mine right nearby, right?
Exactly. Well, the Maricunga, the whole belt of projects in that area is called the Maricunga Gold Belt. And the reason for that is that right near it is the Maricunga Salar. And so all that region there, and there's Maricunga Lithium, there's Maricunga Mine, there's Maricunga this, Maricunga that. That's why we moved away from the Maricunga name, because it was just too confusing. But essentially, because of the Salar, and we're right in that region of the Salar.
What's a Salar? Desert?
No, the Salar is a salt lake.
Oh, right. Okay.
Right. You have the Maricunga Salar in the south of the Atacama region. To the north, you've got the big Atacama Salar, which feeds, Chuquicamata and Escondida and a few other things. So, that's where the name came from. And I don't know what it means, but we just decided to steer away from it.
Okay.
So we came across Atacama Pacific. It took us about a year to do a transaction with them because they were difficult, and it wasn't until August of 2018, I think, that we did the transaction. We put the two companies together. I think at that point their valuation was about $50 million. Our valuation was about $50 million. It was nearly a 50-50 deal, and we took over management because really it's a development project, and they had no clue about what to do from a development perspective. So that's how it all came to pass. Unfortunately, when we took on the asset in 2018, they hadn't done a lot of work in preparation for development, insofar as there was no environmental baseline study in place, which takes time because you have to go through all the seasons to accumulate data. So we started straight away in mid 2018 to compile our baseline study. And it wasn't until January of this year that we completed the baseline. We quickly put together a environmental impact assessment study, and we filed that with the authorities about 5 weeks ago, and we announced that about 5 weeks ago. So now we're in the pipeline to build this asset. Also, late last year we completed a PFS, which is the subject of the EIA, and we can talk more about that in a minute. But that's sort of the history of how we got to this point. We continually look at opportunities as well. We want to be a multi-asset precious metals company. We realize that being a one-asset company is not that attractive for a lot of investors, and we are very active on the M&A front. We have live CAs right now. We've been looking at lots of different things, companies, projects, etc. And hopefully over time, we'll start to build a pipeline of assets that are going to look very attractive from an investor and company perspective.
Would they all be heap leach, basically? Is that your specialties?
No. The interesting thing is all of us, the senior management team, have worked underground extensively, predominantly in Australia when we all lived back there. I live in Lima, Peru. I've been here 20 years now. I've been in the business for 40 years. But my team all has good, strong underground skills. So we have been looking at underground projects as well. And obviously not only heap leach projects, but projects that may require CIL or flotation or something different to heap leach. So we're not adverse to that. It's all about doability. We like simple things. We don't like to make our lives complex. We like to keep things simple. So as long as the project's got simple characteristics, metallurgical characteristics, etc., then we like them. And that's what attracted us to Phoenix, because the metallurgy is very, very simple at Phoenix.
Yeah, it's the largest undeveloped.
Yeah, it's interesting. It's the largest undeveloped gold heap leach project in the Americas. Okay. And also, it's in the top 10 gold discoveries in the world over the last 10 years. It's number 8. So that just goes to show the dearth of projects that are out there that have been discovered of any size. At Phoenix, we have 5 million ounces of M&I and 1.4 million ounces of inferred, all within a $1,500 pit shell. So, it's a big, and it's open. It's open at depth, and it's open along various aspects of its strike and width. So, there's not too many of these projects out there. And good thing is, it's in a mining-friendly country, Chile. And so, it's going to be built. That's for sure.
Right. Are there a lot of similarities with Phoenix and La Arena and Shahuindo?
Shahuindo, yeah, lots of similarities. Low grade. We think our project can be potentially run of mine, as La Arena and Shahuindo currently are. We're going to do some work on that, because in the past, all the metallurgical test work was done based on single stage, dual stage and triple stage crushing. And we have a lot of data on that, but we believe, based on what we see in the rock and our experience with La Arena and Shahuindo, we think this can be run of mine. And what we intend to do before we bring this mine into production is we're going to run a trial heap. Not do column tests, but actually set up a heap near our project and do some trial leaching at run of mine. And if we can get some very similar recoveries, our current single stage crush recoveries are 75%. If we can get recoveries close to that, we'll probably just go run a mine here because of the OPEX cost benefits of doing that.
Right. Looking at your NAV study, it's interesting. You run it at, today's numbers, 1750. And, you're getting some pretty big numbers, 440 mil NAV, 68% IRR. You need a little bit of...
And that's based on the small project. That's based on our starter project at 20,000 tons a day. So that's very important to know.
Right. That
this project ultimately will be expandable. And
right.
We're going to show that over time. One of the things that is prohibiting us from showing a larger project is access to more water. And we'll obviously talk more about water in a minute. But we're looking at various water options. And once we secure the right water option, we believe the ultimate throughput rate of this project will be about 100,000 tons a day, 5 times bigger than what it is now.
Nice.
And at that run rate, and remembering we've got 5 million ounces within a $1,500 pit shell, so we've got a lot of ounces sitting in the ground. We will produce somewhere between 250 and 300,000 ounces a year of gold from the one project, right? So this project has the ability to become a world-class heap leach project. It's not at the 20,000 tonne a day rate at 100,000 ounces a year. It's good, but it's small. Mm-hmm. But it's got the expandability potential, and that's really what we want to show. Once we've secured the water option in the not too distant future, we will do a PEA on the larger project so that we can put it out there, show our shareholders, show the public what this project can be and what our timing is projected to be to bring on the bigger project down the track.
Yeah, the stage approach is definitely, shareholders' best friend. I really like the companies that, are able to, build out from, current free cash flow as opposed to keep on tapping the market.
And Garrett, we were the model. You followed Rio2. We were the model because we built La Reina just on 10 years ago, right? And when we did that, a lot of people were saying, "What are you doing? You're building this really rinky-dink project, and it's nothing." And we started at 10,000 tonnes a day at La Reina, and we quickly built it up to about the ultimate rate of 55,000 tonnes a day. I think it is at the moment, or it was. It's getting towards the end of its life. But we were the model. Everybody said, "Wow, that's a great," because when you look at Rio2, we raised a total of $80 million of equity during the life of the company. We borrowed a total of $50 million in a gold loan at the time. We built a $1.2 billion company on the back of not a lot, right? Apart from cash flow. And so that's the beautiful thing about these gold oxide heap leach projects. As long as they're simple from a metallurgical perspective, they can generate a lot of cash and they can set you up to the point where you can create significant value.
Yep, that would be amazing to watch again. Looking at your company right now, one of the things that jumped out at me was, the warrants outstanding, right? You got like 46.5 million warrants at like right around current share price. Do you think you're going to be able, and you need about 100 mil capex, right, to get going?
Yeah, I'd say about 120. I mean, we're finalising capex now. So in the not too distant future, we'll probably announce what our final capex is. We've made a few modifications to the layout of the project. We've included a conveyor from the pit to the leach pad, which we didn't have in the initial configuration. We will explain why we've included that, because obviously the OPEX savings are going to be considerable. But we'll put that out soon. But yeah, let's call it 120 million bucks.
Okay. Do you think you'll be able to get fully financed without major dilution, and how would you do that?
That's my job, and or our job as a team at Rio is to see how we can minimize dilution. And we're greedy. We were greedy with Rio2. Once again, we only raised $80 million for the life of the company. There are ways of doing that, and we're looking at it now. We're going through the financing aspect of our project right now, and hopefully by the end of this year we'll have a solution in place to show people this is how we're going to fund the project. The trick is going to be, how do we minimize equity dilution? And there are a couple of interesting things we're looking at. We were at the forefront once again with Rio2, with La Reina. We took down a gold loan from Red Kite. Red Kite were unheard of before then, and it was one of their first gold loans they ever did, and it was the most successful for us and for them. It was a win-win on both sides. And so it was a bit of out-of-the-box sort of approach for financing a project at that point.
It was a gold loan?
It was a gold loan.
So you got dollars you paid back in ounces.
It was money in return for delivery of gold over time. And I'm not saying we're going to do the same here, but there are other options as well as a gold loan as a way of financing part of this project. The other thing is, with interest rates as low as they are worldwide, we are also talking to a significant international bank about the possibility of pulling down senior secured debt, which will be LIBOR plus, I don't know, 4 or 5%, something like that, which is smart to do because that's probably the cheapest money you're ever going to find.
Right.
But as you know, a bank will probably finance 60, 70% of the asset. It'll be, how do you finance the other 30 or 40%? And so that's what we're working on now.
Any streams, NSRs? Do you have any on
that's the well, and I don't think I'm saying anything controversial here. That's probably the last resort.
Okay.
You want to choose is to get a string or a royalty attached to this.
Okay.
But there are interesting ways of doing things, and I've been talking to a couple of financiers out there about some options that we may pursue, and they're very interesting and do minimize dilution. So that's really what we want to show, is we don't have to dilute this company overly, excessively, and we'll do that.
Okay. I'll definitely keep a close eye on that. Now, there's a lot of active mines in the region, right? Kinross has got 2 active ones, and Maricunga shut down?
No. Okay, so let's look at the Maricunga region.
Yeah.
Lots of projects. You've got Serica Sali Caspice to the south, which belongs to Newmont Barrick. You've got Vulcan, which belongs to Hochschild. You've got La Pepa, which belongs to a Colombian company called Mineros, used to be Yamana. Then you've got La Coipa to the north of us, about 20 kilometres to the north of us. And then you've got the Maricunga mine, which is to the south of us. Now, they're both Kinross operations. Maricunga was recently put on care and maintenance. Why? Because it exhausted its oxide production. It was an oxide heap leach project, similar to ours, same altitude. People ask me, well, how do you do oxide heap leach at 4,500 metres? Well, Kinross have done it, and so it's no brain surgery to work out how you do that.
Didn't they have water issues also there?
They did, and they were drawing water from a certain aquifer, and I'm not 100% sure of what happened, but they got restricted on their water. Now, the thing is that Maricunga transitions into a big sulfide project, which Kinross don't want to turn on right away because it's capex intensive, etc. So they're turning back on La Coipa, which is small to the north of us. It's about 1 million ounces currently defined, and they are turning that on. They've publicly said they're turning it on. It'll take them until 2022 when they're in gold production, which is about the same time we'll be in gold production. And then they are going to use some of the infrastructure from La Coipa, supposedly, for their Lobo Marte project, which is to the southeast of us. But Lobo Marte is very complex metallurgy, $1 billion capex probably when it's all said and done, and it's an environmental tricky area of that region. So I'm not sure how successful they're going to be getting that off the ground. But so that's Kinross. So there's nothing really active apart from La Coipa being reinstated and our development project. That's it. Because Barrick Newmont are not doing anything really with...
Right. It's not moving forward. But that will lead us in, the altitude and the dry desert region water. What's the typical process for water permits up there?
Okay, so and we show this in our corporate presentation, which is on our website. I've got a lot of information on the website, so I encourage people to go and have a look. It's www.rio2.com. But water. There are water rights available in our area of operation, not that we own, that belong to other people, other projects that, as you know, are not operational. And in Chile, in the past, it's been relatively easy to get water rights. Now, water rights are one thing, which means, okay, I've got a water right, I apply for 100 litres a second, 500 litres a second, 1,000 litres a second, whatever the number is, and you can get that awarded to you. The next trick is to be able to permit the usage of the water, right? And typically what the government does is if you've got a water right for 100 litres a second, they will say, okay, you can draw up to half of that, 50 litres a second, and we'll give you a permit to use for 50 litres a second. Or if you've got a water right for 500 litres a second, we'll give you a permit to use for 250 litres a second. So that's typically what happens. So water is available, and because there aren't a lot of projects operating in that area, there's no big usage of water in the Maricunga area. So we're looking, and once again, talking about the future of our project, we're talking to some of those people that have already had rights awarded to them. Once again, our requirement for water for a bigger project will be around 100 litres a second. Right now, our water usage is about 20 litres a second. So it's not an excessive amount of water. It's a lot less water than when you've got a complex metallurgical process like crush, grind, mill, float, tails, etc. We don't have that. Right. So
that was a good little acquisition you made of that mining camp right next to you for what, $1.5 million? That's 20% of your water.
That was a positive step, and predominantly because of a couple of things. It was because there's a camp there that we've been renting that we're going to refurb as a construction camp. The whole infrastructure there is at 3,200 metres, and it's only 20 kilometres from our site, but 3,200 metres is much better to sleep at, to work at, etc., and then drive up to the project of 4,500 metres. There's a camp there. There's the power line goes straight through the infrastructure area, so eventually we'll connect to the grid. Like La Reina or like Shawindo, we are starting this project with generators. The generators will go to backup power once we connect to the grid in year 2 or whatever of operations. So that's a big thing because that'll save us a lot of money on OPEX. And the third thing is there's a small water bore there, well currently small, that's permitted to 5 litres a second. We're going to do some test work on that bore to see if it's got the capacity to do more than 5 litres. We don't know how much. It could be double, it could be triple, it could be a lot more. We don't know. We have to do the work. But anyway, we're permitted for 5 litres a second. That's 20% of the water that we need for the 20,000 tonne a day case. So already we've saved on trucking costs for bringing the water up from Copiapó up to 20%, because 20% of the water is going to come from that bore. So we paid $1.5 million for that infrastructure, and people have asked, so what are you going to get out of it? Well, all I can say right now is tens of millions of dollars of operating cost savings over the life of the project. So it's a great acquisition. It was sitting there doing nothing, and we'll use it to the fullest.
So you said that you could upgrade their water use permit, and you could perhaps
maybe. I'm saying maybe. We got to do the work. We've got to do some research. We've got to see where it's drawing water from, what sort of potential it has to expand the draw of water. Can it be expanded 10 litres a second, 20 litres a second, 50 litres? Who knows? But we got to do that work. And once again, once we find out, we'll be able to tell everybody. But so the good thing is, even with 5 litres a second, that helps us a lot with our starter project.
Yeah, no doubt. That would definitely be a game changer if you're able to upgrade that. And now, speaking about water, the major thing originally, did what was it, a pre-feasibility study? It included a pipeline, right?
Their pre-feasibility study, the one that Atacama Pacific did in 2014, contemplated an 80,000 tonne a day operation, which is big, remembering we're starting at 20. And it contemplated pumping water from the water retreatment facility in Copiapó to the project in a pipeline that would cost about $140 million capex.
For everything, or for just a pipeline?
for the pipeline, the pumps, and everything. So that's 140 million. Then there's the cost of the water, which is not prohibitive. And then there's the operating cost of pumping that water from 500 meters elevation at Copiapó to 4,500 meters of the project. So it's doable, right? And it's obviously something that we would consider, but our preference would be to try and find water closer to the project at the same similar altitude, because then, sure, we'll have to build a pipeline from wherever the water source is, but the operating costs of running that water will be a lot less than bringing it up from Copiapó. So, it's a bit of a trade-off that we'll be doing. But yeah, we have offtake for up to 80 litres a second from the water retreatment facility that we're getting our water from for the start of the project. So we could move ahead with building a pipeline. That's no problem, but it's whether we choose to do that.
But in order to keep capex low and
we're not doing that to start with. We're going to truck water there.
Right
now, because we're doing this project at 20,000 tons a day. The consumption of water is about 2,100 tons of water a day, and that equates to a flow rate of about 25 litres a second. Although you're not having a pipe, so it's not a flow rate, but it's 2,100 tons a day. So the way we looked at it, we said, well, what's the simplest way and easiest way to get the water up to the project? And we sat around the table and somebody said, well, why don't we truck it up there? And we all looked at each other and went, shit, that sounds interesting. And so what we then did was we worked it up from first principles, the cost of the trucks, the cost of transport, fuel costs, all that sort of thing, the cost of the water. How does that look? And in summary, it equates to about $100 an ounce of our operating cost, right? So it wasn't prohibitive. Is it something we want to do for the 16-year mine life of the 20,000 ton a day case? No, it's not. And that's why we want to expand this project. I mean, we don't want to stay at 20,000 tons a day. So it's a means to an end, because what it does, it gets us started. It gets us into production. It gets us cash flowing, and then we can dovetail in some other solution later on. But in the meantime, we're in production and we're taking advantage of the current high metal price. And we're not waiting years for the ultimate solution of water, which a big company would probably do.
Right.
We don't want to do that.
You're going to be local trucking company's best friend up there, right? If you get that done, because
we're going to be everybody's best friend, because this project during construction will employ more than 1,000 people, and during operation will employ more than 500 people.
Nice.
Now, the town of Copiapó is about 180,000 people. Before COVID, there was an unemployment rate of about 10%, so it was pretty high, even though a lot of the employment there is for mines in the area, Candelaria, a lot of copper mines in the area, a couple of small iron ore mines as well. And so, we're going to be, and also the people that have come off of the Maricunga mine, the leach project for Kinross. We'll be looking at some of the key people from that to come across to us as well. So, we're going to be contributing significantly to the economy of the region, and that's all very positive.
We like the project, but taking a closer look, at the trucks, right? It's basically 72 trucks a day. It looks like a truck every 20.
No. It's about 30 trucks in a fleet, right? 30 trucks in a fleet. It's a truck every 20 minutes leaving the retreatment facility or the water retreatment facility. And
is that doable? What are the roads like up there?
Fantastic. I mean, we're on a main road. It's an international road between Copiapó and Argentina. It's called CH31. It's essentially a tourist road. We have a video on our website that shows you the road route. And it's all sped up, but you can see the sort of environment you're driving through. Because, a lot of people asked us about, well, you're going to be trucking on this road, you're going to be kicking up dust, you're going to be making noise, what about the locals? There's nobody between Copiapó and our project.
Okay.
I mean, we're in the Atacama Desert, and it's in hospitable country, so there's nothing between Copiapó and our project where we're going to cause any issues. So that's all built into the EIA that's getting reviewed right now. So, nothing's hidden, and we've already explained all this from a social perspective. We've got 6 community agreements in place, signed with the local communities impacted by the project. That's all been done. We've got a very knowledgeable social group who did a lot of work for us here in Peru, which is much more complex. Anyway, we've got that in place. We've messaged the whole concept of trucking water, and as you said, a lot of people going, well, I want to be involved in driving one of those trucks or providing trucks or whatever. So there's a buy-in. There's no kickback to the concept. It's something different. It's not conventional, and it's not something you want to do for the next 20 years, but it's something that for a couple of years, 2 or 3 years, will start off our project, and that's the important.
How long will it take the trucks to get there? It's like 150 kilometers away?
Yeah, it's 150. In a Toyota Hilux, it's about a 2.5 hour drive from Copiapó to our project.
Okay.
So from a truck perspective, obviously it's going to be slower because you've got a heavier load.
Okay.
But anyway, that's all built into, and once again, if you want that detail, talk to the technical guys. They've got a spreadsheet that shows you all the cycle times.
Okay.
And times involved.
What's the difference between Route A and Route B? Route A is not built yet. That red.
Well, that's interesting because a lot of people. The reason we show that is a lot of people were saying, okay, so the water retreatment facilities on the west side of town, you've got to truck through town, and that's our preferred route. What happens if there's a traffic accident, traffic in general, a blockade, some sort of issue with that route? What do you do then? And there's an alternate route to go around the town. It's another 50 kilometres. And the reason we put that in our presentation was just to show, yes, there is an alternate route, and it doesn't go through town. And the differential in cost is about $30 an ounce if we were to exclusively go on the bypass route, if you want to call it that. So it's just to show it and just to say to people that's there if we want to use it. And I mean, we have alternatives. We're not stuck to go through Copiapó if we can't.
Right. I got you. Good. That pretty much answers all my questions. What do you want to add anything else to the conversation?
No, I think, look, you know what it's like. You know this business. It's all about, can projects. There are plenty of projects out there. There are plenty of projects that are supposedly in the development stage, but how many and which are going to actually make it? And the fact that we're behind this project, because of our track record, we are going to make this project go into production. I mean, we're miners. So from an investor perspective, we're not a trade. We are an investment. And so I think what you're going to see is value appreciation of our story over, the next 2 to 3 years as we bring this project into production.
How many shares of the company do you own?
I own 15 million. I invested about $2.5 million of my own money in this. I'm the largest shareholder out of the management team. That's who I am.
Yeah, it's good. We follow Rio as a tremendous value creation, made a lot of money for shareholders. Not every mining company is like that. A lot of mining companies, they try to increase production. It's not profitable. The management gets paid. They get increased salaries because of the increased production, but shareholders get screwed. But you did a really good job conserving, building Rio Alto.
We took Rio Alto from a $12 million company in 2009 to a $1.2 billion takeout in 2015, raising only $80 million in equity.
Yeah. Yep.
So that's the sort of guys we are.
Yep.
We're prudent. We know what we're doing. We're motivated, and people just need to watch us, and let's see if we execute as we say we're going to do.
Yeah, exactly.
If we do, that's the trick.
Yeah, exactly, to build some, good shareholder value. And the fact that you're going to grow the project, hopefully, through free cash flow as opposed to more dilution is great also. What should we be looking for over the next year as far as news and developments from Rio2?
Well, we're going to be, the EIA is in process. We hope that gets approved in about Q2 of next year. If that happens, then Q4 of next year will be in construction. We'll be announcing how we're going to build the project over the next little while. We'll be announcing how we're going to finance the project during this year. That we're not doing any drilling, so there's no sexy drill holes coming out of our company in the next little while. But it's all about how we're going to get to the production stage. And and who knows, maybe we do some M&A along the way. Acquire something, merge with somebody, because once again, it's all about consolidation in this sector. There's just too many junior companies around, and it's just a matter of finding the right opportunity to put ourselves together with something else that gives us a bit of diversification from an asset perspective and a pipeline of growth.
Okay. The popular thing these days is the merger of equals, right? Where it's kind
I think, look, if we're a $100 million company right now.
Yeah.
If there was another $100 million company that we were looking at and we both agreed, I think we do a merger of equals for sure. Nobody gets paid a premium. I mean, if you're looking at a junior acquisition of a $10 million company or $20 million company, maybe you pay a premium because, obviously, just to I don't know, make it equitable. But certainly at the same level, mergers of equals are great things. And what you do is you show the value creation after the transaction,
right,
which is exactly what's happening with Silver Standard and Alistair and Kirkland Lake and Detour,
yep,
and there's a few others out there as well that have recently done it.
Yeah. Okay. Good. Alex, I appreciate your time today. Thanks for joining me.
Yeah, Garrett, and thanks very much. And anybody can ask me questions. I'm an open book. My email address is alex.black@rio2.com. Happy to answer questions directly, and happy also, Garrett, to go through some of the technical stuff if you need to on a more detailed basis.
Yep. And find you on Twitter as well, right?
Find me on Twitter. I'm active there. Don't hold it against me.
Yep.
I just try and help people out by giving my opinion. It's my personal opinion.
Yep. Nope. I think it's great. There's a lot of information out there, and it's great hearing information from a, CEO mining engineer that knows how to build shareholder value.
And is not scared to
exactly.
to speak up.
Exactly. Good, Alex. Thank you. We'll be following you closely.
All right, Garrett.
Thanks.
Thank you. I really appreciate it. Thank you very much.